Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and with me, as usual on Mondays, is Taylor. Jake is not going to be on this one; he's on Wednesdays, but we're just waiting for Jeff to show up. He's on a call with a client, so we're going to go ahead and kick this thing off. How's it going, Taylor?
Yeah, everything's going good today. We're still uh, chilling out, waiting for what's going to happen with crypto here.
Yeah. No, it's our newsletter though. The one that we started about a week and a half ago. We've been nailing it, and today was no different. I'll show that here in a second. But those of you that aren't watching on YouTube, I highly encourage you to come over here, join the chat. This is our Money Talks episode every Monday. We have Taylor, who is uh, an estate attorney and small business attorney. He gives it also has a title company, so he has a lot of very unique insight into markets and how to mitigate tax liabilities, things like that. Jeff, that will be joining us here in a second. Looks like he's looking for the link. He is not a licensed financial advisor. What is he?
He's a certified financial planner, which is a CFP.
Okay.
Basically, it's an equivalent to what it's about as hard to become a CFP as it is to become an attorney.
Oh, damn. Okay. So, but he is been helping for decades. He's been helping people in traditional or TradFi markets, and then of course, I have my finger on the pulse of DeFi and crypto. So together, we kind of give our kind of unique perspectives on just investing in general. So again, come over to DeFi Crypto and Airdrops on YouTube. We got our brother channels. We got Jake Call that's on our Wednesday calls. Here, let me add real quick Jeff to the call.
I can go through basically some of the things where, what's going on right now, kind of where it should be. If you're in crypto, you have to understand almost every crypto is bearish trend, which
Oh yeah.
if you're going to
So real
be,
quick, Jake Call on our Wednesday call is a DeFi guru, as is David from DeFi University, and then you got Drew over at Blockchain Basement and Discover Crypto. We got my boy Jeff, the Texas or not Texas Jeff, Cali Jeff for airdrops over at the Blockchain Report. And here is our newsletter that me and Taylor started, DeFi WIZE with a Z.com. And if you look at our newsletter this morning, we called that we were going to dip deeper. Yeah, but we're looking at about 90,500 roughly for a potential bottom for today. Looking at the trend line, you can see drawing a trend line from back in 2023. You can see it's been respecting this for a while. We're sitting on that right now. So we're hoping for a bounce here. We hope it doesn't go down below and close out, but we're kind of tracking. So we'll see what happens. But what are you seeing, Taylor? What are you seeing in the markets?
so right now we're shifting into a weird kind of transition in the sense of a lot of things that have been bearish for a while are turning, bullish for a while are turning bearish. Big thing right now is understand like gold, silver is still bullish trend. Okay. The US dollar is bullish trend right now. So, I mean, a lot of money is going to be tied up there. And so, I mean, it's possible, but all signals currently is that, Bitcoin is still going to be bearish trend. I mean, it can pop off this line and reverse right now because over the weekend I did an analysis on when the volatility of Bitcoin crosses of the 30 vol or VIX of Bitcoin crosses above and then comes back below the 60-day. It's generally, usually can be a signal that things are going to reverse. Since 2020, it's happened about 5 times, and 4 of those 5 times was a reversal signal. Now, however, there was one time that it was not, and it was a big head fake for people. So, and it went down a lot after that. So it's not like a 100% signal that it's going to reverse. There's just some setting up that there possibly could be, over this next week or two. However, if it doesn't, these are when you see big drops. And as you notice on our newsletter, if you're getting our newsletter, there over the weekend, there was a significant drop on the bottom end of our ranges. And those ranges come from volatility signals based upon trends. So that's usually not a good sign when you see that a big jump down, because those are recalculated daily, and when you see that basically the floor collapsed on it, that's usually not a good signal. But like anything, this is investing your money. Nobody knows. Everything is a gamble here, and so it's the understanding of sometimes you gotta, if you want to take risks, you gotta know when to take your risks, and be careful, and just know that sometimes you might eat your lunch and go, well, I shot my shot and I missed.
Well, I mean, I know I'm down about, 30% on 30 to 35% on my crypto investments because, I'm very heavy into alts. But luckily, I mean, I'm not down as bad as most because I've actually mitigated my losses with DeFi. Most of my bags, I'm in full range pools and lending and just constantly earning more. So, over the past year of doing DeFi, I've earned so much that I've actually, lessened the blow. So, Jeff, what are you seeing in the traditional markets?
Well, we've had a bit of a pullback the last couple of weeks. I think there's some skittishness. There's a narrative about the expansion of the hyperscalers and the databases that need to be built instead of being funded by free cash flow from these giant companies, Meta, Google, Amazon, right? Obviously, OpenAI, all those. It's now being funded by, like, especially when you look at Oracle, it's being funded by debt that's being issued. There's a question of, well, can that debt be paid back? Because you're deploying, not millions, not billions, but trillions of dollars over the next several years, and the ROI on that to make it all work out pretty massive. And so you have this weird dichotomy between pretty much everyone agreeing that AI is the future and at the same time wondering, will it monetize quickly enough for this first sort of tranche of AI players to make it work, right? So again, we're very reminiscent. Like there's been a lot of comparison to, like, you guys maybe remember, like, Quest. And of course, you have MCI WorldCom, but in the early 2000s, you had this massive infrastructure build out of fiber optics because of what the internet was going to become. And the companies weren't wrong. All that fiber optic capacity ended up being utilized, and then even more was deployed. But they were wrong on the time frame. So MCI WorldCom went bankrupt. Quest went bankrupt. They literally laid hundreds of millions of miles of fiber across the country, but they couldn't get enough revenue and quickly enough to make up for their capital expenditure, and they went bankrupt. Even though the internet, without question, was the future, there was a misestimation between how quickly you need to outlay the capital versus how quickly you're going to get a return on your investment.
They missed the timing.
It's the timing. So that's the catalyst of all of this.
Like they were in a boxing match, and the guy dropped his hand, and they didn't take the swing, or they took the swing.
I mean, you have this situation where it's not like pretty much everybody agrees on the narrative eventuality. They disagree on the timeline and the horizon of getting paid back. So that's been one of the things. Like if you look at Oracle, and I'll find some charts later on in the show, but Oracle is now just burning through cash, and they're a major player, right? And then the other big thing that is disconcerting is Japan. So Japan's demographic, Japan to some degree has been predicted for well over 10, 15 years to be like the next sort of shoe to drop in global contagion, because you have a population that is very aging, right? They have a very big demographic problem. And their version of the Fed, the Bank of Japan, buys everything basically.
Well, I know they're a huge buyer of U.S. debt.
But just so you know, in 1 year, the 10-year in Japan went from 0.8 to today it's at 1.73. Now that may mean nothing to anybody that's listening to me, but think of it this way: on a relative basis, Japan's debt burden got 100% more expensive in a year.
Damn.
So that's problematic because they're still the fourth or fifth largest economy in the world, and at some point, if that trend doesn't reverse, that's going to become a problem for all of us because we live in a complex economy.
Well, Japan holds a lot of our debt, the U.S. debt. So.
Right now. But I still expect we're probably not ready for a correction yet in a significant sense, just because there's so much momentum behind and so much money going into AI. But I mean, just like Taylor said, right? That's the future. Who the hell knows? Tomorrow we could wake up, the markets could be down 20% or up 10%, and no one really has a clue in the short term.
Well, I know in the crypto sphere that the big kind of talking point right now is have we topped? Is the 4-year cycle dead? Have we already topped, or we're going into a bear market? And there's a lot of indicators that show that we potentially we have topped out and we're going into a bear market. But there is also a lot of data that shows that the 4-year cycle is broken. And I've seen some very smart people talk about there was never a 4-year crypto cycle, that basically Satoshi that built out Bitcoin purposely built it out to align with existing cycles. So the debt cycle and things like that. So, there's again, there's what do each of you, like Taylor, what would you say as far as the 4-year cycle? Because I know you have a foot in both worlds. So you have a foot in traditional markets, you have a foot in crypto markets. What's your feeling on the 4-year crypto cycle? Is it dead or is it still in place?
It's pretty much dead in the sense of when traditional financing got into Bitcoin. That's pretty much ended that whole thing, because like institutions, like you were talking about earlier, how all these big whales are buying right now.
Yeah.
If you didn't have these big whales buying right now, Bitcoin would be plummeting at this moment. Mm-hmm. I mean, it would be just so chaotic, up and downs. You wouldn't see big institutions. They buy and they hold for a long time, and they are not going to be swayed by drawdowns and different things like that. There's too much money in Wall Street being made right now off of Bitcoin. I mean, it's all the ETFs are the best producing ETFs that they've ever had are all these Bitcoin ETFs. And so they're going to buy up when things are coming down like this, and it's going to stabilize it, and you won't see it. Now, the alt market is very different, and I'm going to continue to stress this with all these alts. They're all the same problem. They're technology that's being developed that with AI now, by the time they finish their projects, there's something better in the pipeline. Mm-hmm. And so each one of these are all going to have the same problem, which is they're going to keep building their platforms and everybody's going to get excited about it. But by the time they launch, there's something better out there. Until you can start buying crypto That's what that's a project Jeff and Kevin, their hedge funds, are working on right now, where it's actually based in real world assets, things actually.
RWAs.
Yeah, that's when crypto will take off as uh, being legitimate something. But of course, some of these projects are going to, they're going to be like Ethereum. I mean, it's going to be a foundational thing because so much is built on it.
Well, I actually have something here that kind of illustrates, what you're talking about. Let me see if I can find it real quick. Where the hell did it go? It basically what it shows, I'm not sure where it went, but there's a chart. And so what it shows is the largest amount of focus is on layer ones. And layer ones being Ethereum and things like that. Basically the infrastructure that a lot of these projects are built on. Next up, you have RWAs, DeFi, and things like that. If you're paying attention to any of the news, that includes stable coins. That's a key part of that. If you're paying attention to any of the news, you have, JP Morgan, launched their token on Base Network. You have, world governments that are drafting legislation that is solely focused around stable coins, DeFi, RWAs. You have the tokenization of commodities, and private credit, all these things that are already done and that are just accelerating. You can go to rwa.xyz and see that adoption, that TVL building. That is where I personally have been telling our community to focus their efforts, because what you're saying, Taylor, is 100% right. Is as technology evolves, then you have to evolve with it. One thing I will say about that, though, as a caveat, is that institutions move very slowly. The larger the institution, the more slowly they move. So Ethereum is a perfect example of that. Ethereum is slow. Ethereum, the gas is expensive.
Yeah.
You still see these institutions building on it because they have been for a while, and to lift and shift would be a lot more expensive. So sometimes they look at things as fast enough, cheap enough, good enough, and secure enough. And they're looking at these projects like Canton Network that have that privacy layer, because these banks and institutions don't want public visibility of their clients' assets. So there's a lot to it. But Jeff, what are your thoughts? What say you?
on where we're going with Bitcoin?
Just
Or what?
on the topics that we just discussed. I mean, I'm sure that you
Because I will
deal
say,
with.
I was looking something up because Neil over here in the comments made a question, made a point. Or no, David made a point. David Hammer made a point about AR is dead in the water without reactors, and so I was actually looking up some stuff on that, because there is, I'm always trying to think of. Unfortunately, I'm not saying I do a good job at this, but I'm always trying to think of, how do you buy the shovel, right? How do you invest
Oh,
in
the
the shovel?
picks and shovels.
Right,
Yeah.
right. How do you be Levi? They're still around 100 years later. So
Those of you that don't know, he's referencing back in the gold rush era. The people that got rich on the gold rush weren't usually the gold miners. It was the people that supplied the picks, the shovels, the pans, the Levi's, the pants, the boots, things like that. So sorry, go ahead.
one, I think there's opportunity there. Two, I mean, all of us use electricity. So on a personal level, I'm also worried about hedging this, because so I was doing some, because I've read some of this, and I'm looking into, energy demand, and there is a problem. So, for example, the U.S. Department of Energy projects data center electricity consumption will rise from 176 trillion watt hours in 2023 to between 325 to 580 trillion watt hours, or terawatt hours, maybe that's what it is, by 2028, a doubling or tripling. So, there's, and of course we have the rest of us. There's a significant concern about. I mean, Morgan Stanley estimates a 45 gigawatt power deficit by 2028. Others have bigger estimates of falling. So there is a weird situation where there's all this money going into these AI companies to build it. Kind of, if you build it, they will come. But you have to have the infrastructure too, which is a much which isn't necessarily a private enterprise solution, right? You have to have state and local and federal governments come in and build that. And I'm a little bit hesitant to feel confident in that arena because it's not like our government's done a great job historically of planning ahead, right? Um, so I also wonder about
They're
that.
usually reactive, not proactive.
Right? Yeah, we're reactive, right? I mean, we do shit after the fact, but you can't just whip up a nuclear power plant quickly, much less 20 of them. So I think there's
You can, but it might be a little sketchy.
and when it comes to the Bitcoin thing, I just want to remind everybody whether it's Bitcoin or freaking your favorite stock that you're buying on Robinhood, whatever it is, right? What you see at the end, I don't have access. I'm sure you do, actually, Mike, but I would like to see the flow data more. I mean, I do. You see the news when big whales sell or buy, but in general, you got to remember, right? It's only the last price that somebody bought and sold at. It's not necessarily indicative of the underlying resiliency. What was it a couple years ago? Diamond hands or whatever the hell it is, laser eyes and diamond hands. So I think, and I've been saying this for 2 years now. I'm really looking. This sounds really perverse. I'm looking forward, a crypto standpoint only, a significant recession. Because what I want to know is how many of the people that are marginal buyers are your 27-year-old Uber driver that's delivering DoorDash and he's got 20,000 in Bitcoin that's going to panic out when he's got to pay his rent versus institutions and whales. Because I think that's where you're going to find the true floor. Is after.
Well, and I think that we're pretty close, if not there. I mean, the crypto market is beat the hell up. The fear and greed is at like 16 or 17 last I looked. On a scale of 1 to 100, like we're in extreme fear, and pretty much, I mean, people are beat up, and I see a lot on social media where people are saying, I sold my crypto. This is bullshit. I'm out. So, that there's a lot of data that's supporting that. I really feel, and I could be wrong, but I really feel like that if we do go into another full-on bear market, it's not going to be the pullback that we're used to seeing of 90, 95%. I think it's going to be like a 70, 80%.
Now, do you guys know? I'm curious. Like, I'm sure we could figure this out pretty easily. Maybe not live, but if you were to look at the top 10 crypto coins or holdings by size, right? So I'm sure ETH and XRP and all these other different ones. How correlated are they to Bitcoin? Right. So, like, if a Bitcoin drops 5%, does the number 2 and number 3 drop 20%? Like, how correlated are they? Because I'm wondering how much of people being out of crypto is related to what was it like a month ago when like 40 billion was liquidated in a day. I'm wondering how much of people's frustration is because they were in meme coins or they were in smaller scale coins and they just can't handle the volatility, or are they kind of Bitcoin purists? Who are we talking
You want
about?
to take this one, Taylor?
Yeah, well, I mean, Bitcoin is down about 20%. No, it's down about 26-7% from all time high.
Let's take a look. Bitcoin
like 126, 128, something like that.
Go ahead and keep talking, Taylor. I'll pull it.
So, like, in that, really, I mean, that's from its all time when it was shot. It's still
26.
I mean,
we're down about 26% from its all-time high.
I mean, yeah, but even from earlier this year, you're still way up if you bought earlier in this year. But on the altcoins, yeah, everybody was expecting the altcoin season to happen, and it didn't. And so I think a lot of people got killed there. However, one of these things, like, where can you get the picks or shovels in this whole AI boom? A big thing right now that's been going on since basically March has been silver. Silver has just gone through the roof this year because the reality is you need silver for all this technology. And so that play was called, earlier this year. And so looking at that, energy is going to be a big thing in the future. So, I mean, investing in energy stocks or ETFs, that might be a good play to go forward. But currently, right now, there is a projection for this month to be there could be a big drawdown even in the market. And so it's kind of a month just to realize, there could be a lot of pullback here, but the first quarter of next year is a projection that there's going to be another revamp up. So this is actually a good opportunity to kind of just be a little patient. There's nothing on the radar unless there's a black swan event, something that's just not expected. It's like, if things play out like they should, this is actually a good time to start getting ready to invest in some things. Not right now. We'll play it out over the next couple of weeks here. But when the signals turn bullish again, that's the time to take your shot and see what's going to happen. Now, they're projecting somewhere around March next year to have another big drawdown. But there will be the first quarter of next year that looks like an opportunity that you can make some money.
So, I know what I'm doing because I've been investing in crypto all through the bear market and all through the bull market, and basically expecting to to make money. But I'm glad I found DeFi because honestly, if it wasn't for DeFi, I'd be a lot more down right now. And what I've been doing, as kind of the stars have been aligning with a lot of what's been going on recently, is I've just been redeploying into lending and full range pools. Because if I'm going to be hodling these bags, if we are going into a bear market, which there's an argument again that can be argued either way. I'd rather be earning instead of just hodling my bags. I'd rather be stacking more of the projects I believe in. My aerodrome. I'm putting together. I have all my arrow either in locks or in full range positions, earning more and adding to a side bag that I have because I'm going to do another lock. There's an announcement that came out where Aerodrome and Velodrome are merging, and Q1 of next year or Q2, they're launching a new Aerodrome platform, and they are going to be integrating institutional funds and a lot of other offerings. It's going to be cross chain. It's going to have integrated bridging, automated bridging, automated like swaps, atomic swaps, things like that, to where if you want to, and of course, a lot of the functionality that we enjoy on VFAT. So being able to zap in to a liquidity pool without having to, go and swap and, do a bunch of the manual
I just
processing.
rebalanced on VFAT. I'm not sure if
Nice.
you're right, but I did it. Which,
Oh,
considering I've never had to log in this weekend, is impressive.
it's so easy to use that interface, and I'm so excited to see that that's finally coming to an actual DEX like Aerodrome. So, I'm paying attention because one thing that I have noticed is, big institutions, as we just mentioned, they are buying a lot of these, good solid projects, Ethereum, Bitcoin, a lot of the other projects, because they can afford time in the market. They can buy at these prices and sit on their hands and wait. Whereas the average retail investor, like myself, they invested thinking there was going to be this big bull run. They were going to make a bunch of money. They were going to cash out and life was going to be great. That never happened for the majority of the market. So a lot of people are frustrated and they're going to start selling at a loss. You need, and I've said this over and over again, you need to make sure that you're only investing money that you are willing to sit on your hands, and make sure that you're investing in solid projects and sit on your hands. The longer you can sit on your hands, the better chance you're going to have of profiting. Jeff, do you see that when it comes to traditional markets as well?
Oh yeah, the reason why from an investing perspective, all of us do all kinds of different things besides buying and holding, is not because buying and holding is a bad idea, but because humans are terribly, terribly bad at doing it. Right? Like
Because they're emotional.
there's a study that shows there's something called comes out every year. It's called the Dalbar study, and it shows like it's traditional markets, but it'll show let's just say the last 20 years, if you held the S&P, you would have done uh, if I'm sorry, a client just texted me and I need to check my watch. Well, I was like, wait, what?
The
So
S&P.
look, let's say the markets did 8% over the last 20 years. It'll show that's the average of the market. And then it'll show you like the average return of a fund that's index fund is basically that minus the most small fees. And then an actively managed fund's that minus some more fees. And then the average investor is like 3%. And that 5% per year gap is almost 100% behavioral, because as humans, even if you're what you would consider prudent or reasonable, and you're like, well, I just adjust my holdings once a quarter. I just kind of look, and this is out of favor, and this is in favor, and this is happening, with monetary policy, and this is this thing that just passed with taxes, and people try to make these what seems to be in the time frame a reasonable adjustment, and they almost always shoot themselves in the foot. Almost always. And
these candle charts. It wasn't it some dude in China or something that came up with these, or Japan, and basically it's a measure of emotion.
That's right. I mean, like there's I don't care. Short of like, I don't know, you have you're Pfizer and you have a drug that treats cancer, and they come out with somebody comes out in Norway saying they just cured it, like something super 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 black or white swanny. The only reason why a stock changes, I mean, Walmart, I don't care what Walmart stock's done today. It is not worth less or worth more than it was a week ago or a month ago. It's just the animal spirits of the people that are buying and selling for whatever reason they're buying and selling. Right. So I think that, yes, if you can do nothing and you have your money at work, historically speaking, in a capitalistic society, long term, that's your best bet. However, for a lot of our clients, having some kind of methodology or tactical strategy or hedging or something gives them the behavioral bandwidth to stay the course. So in other words, doing something systematically is still better, even if it's not quite, even if you look back and not quite as good as just holding, it's still better than just waiting until your emotions take over and making knee-jerk reactions. Almost always, right? Now, that's not always true. I mean, my father worked for AIG. I remember having a very, very many a conversation with him during the 08 crisis, and I couldn't get him to sell a stock because he's like, I remember lamenting this to one of my friends at the time, and he's like, well, you know what they say, if you like a stock at 80, you love it at 70. If you love it at 70, you got to double down at 60, right? When you're a true believer, it's really, really hard to recognize in real time when there's been a paradigm shift that completely changes the value of something. So because of that, he still owns quite a few shares of something that is effectively worthless compared to what he bought it at. It just is what it is, right? So for everybody out there, you got to have, once you never, ever buy an investment unless you know what you're willing to sell it for.
Yeah.
Up and down. Right?
Yeah.
And if you're saying, oh, no, I'm using Bitcoin as an example. Oh, I'm a true believer. I think, what do you call it? Dirty fiat, all that stuff. Like, believer, I mean, to some degree, I was talking about this with Taylor the other day. I'm like, I think some people, if they really buy into the thesis, should lock it away in some kind of time locked hard drive or something where they don't have the option to sell it for 10 years. Because we are all our own worst enemy in this one.
Yeah, sometimes the best thing that you can do is, like, if you believe in something, like, don't have it where you can see it. Like, because if you log into your account and look at your account all the time and you just see negatives constantly, that affects you too much. Like, some of my best investments are, I put money here and I didn't even look at it. I forgot about it. And then
Yeah.
you get it back a lot later and you're like, oh wow, I did really well. Like I just not touching it or doing anything was kind of the biggest benefit. But one of the things to watch here is when things come down is that, like, this is an opportunity to really get an understanding of each of these projects.
Mm-hmm.
The things, like, it's tempting to invest in the thing that came down the most because you're like, oh, like it will come back, you know.
Not always.
Actually, what you want to do is what didn't do bad. So, like right now, what's not going down right now? There's only one bearish crypto right now, or sorry, bullish. Sorry, all are bearish, but there's only one bullish one, and that's Zcash. Every other one. So it's like, well, what's going on with this Zcash right now that is different than everything else? I don't know. I don't know.
A lot of it is narrative. You know, there's a huge push on the privacy, you know, the privacy aspect. So you know, Zcash has a privacy layer, and you know, of course, you know, Canton Network, you know, institutions, you know, all that stuff. Yeah, Mooks, you know, just put in the chat. They're privacy coins. That's the big thing. That's the big narrative that's going on right now, kind of quietly in the background.
What are those?
What's that?
What's a privacy coin?
Basically, it's like Canton Network. So you know, these institutions, banks, governments, you know, Bitcoin and you know a lot of these altcoins, you can go on chain, and I can see what the whales are buying, what they're selling. I can see everything that they're doing as long as I know their wallet address. So you know, a lot of these internet sleuths, you know, or on chain sleuths will go and they'll just you know do what the whales are doing. You know, if they see them selling, they sell. If they see them buying, they buy, and do pretty well. The you know, banks and institutions, you know, of course, you know, can't have that, you know, when it comes to you know client funds and you know things like that. So you know that's why I'm so bullish on Canton and you know a lot of the privacy projects for RWAs and DeFi is because there's going to have to be a privacy layer. You know, whenever it connects siloed
But I thought one
siloed
of the main
systems,
tenets of
you know,
blockchain
like different
is
banks,
everybody can see it. Everybody can
you know,
audit it.
JP Morgan Chase, you know, doesn't want Wells Fargo seeing what's going on in their silo. So there needs to be a privacy aspect to that. That's basically what it is.
But doesn't that defeat some of the purpose of blockchain to begin with? The whole it's transparent, it's a public ledger, et cetera, et cetera, et cetera.
The old school mentality, yes. So the old school mentality was decentralization, you know, that it was, you know, that was public, that it was immutable, you know, all of those things. The thing is though, just like with any technology, once it's adopted by institutions and governments, all of that goes out the window. That's the wish of you know the libertarians amongst us that you know want of you know a free and open society. However, that's you know banks and institutions, they want to keep their stranglehold. You know, they want to keep the power, they want to keep the money, and part of that is that anonymity, you know, that privacy. So
Hmm. All right. Well, I didn't know that could exist. I don't know if that's cool or terrible, but it's interesting.
it is what it is, and you have to remove your emotion from it. It's like, yeah, you know, I would love for that old school mentality to reign supreme. However, you know, everybody was excited that institutions and banks and governments and all that liquidity was coming into the crypto markets, and some of us were saying it's like it's a double-edged sword. I mean, I was saying this years ago. It's a double-edged sword. Yeah, a lot of that liquidity comes in, but with that comes the manipulation. With that comes, you know, with the money, they can influence how this technology evolves. It happened with the internet. You know, it happens with almost every technology. So, you know, you need to understand that and remove your emotion from it. It's like, yeah, you can. There's a lot of people. There's a project called Cardano or ADA, and Charles Hodgkinson that that is the lead of that is one of the old school mentality. You know, he sticks to that mantra of decentralization and you know kind of the old school way of thinking, and they've fallen behind. You know, it's a great project, but they didn't build DeFi. They didn't build out, you know, really anything of merit on it, and they're playing catch up now. You know, he's trying to get into DeFi. He's trying to build out some stuff now, but he's way, way behind a lot of the other projects, like Ethereum and things like that. So anyway, that's
So I
what's going on
saw
with that.
Stan asked about, are we nipping into recession? My personal opinion, I think I don't know if we're going to nip into an asset recession. I absolutely think we're going into a jobs recession. I think we're already there. I mean, quite frankly, it's pretty shady that we don't have jobs reports from October, but the private reports are looking terrible. We've had the most layoffs since if you don't count 6 months in 2020 because of the knee jerk reaction to COVID. We have the most layoffs since 08, 09 without any seemingly major trigger for that. I'm very concerned about that. We need to start a disclosure up at the beginning that says this is not financial advice because I don't know, stay in 5, 4, 3, 2, 1 from anyone. But things that me and my team look into a lot right now: structured products, indexed annuities, buffered ETFs, floating rate funds, things that are relatively nimble or have some kind of hedge to them. So, for example, you know, a structured product might be like I know this quarter or this month I saw one from UBS. Over the next 18 months, whatever the market does, you get up to like 12 or 13% growth today. But if the market goes down, you get your money back in 18 months. That's the kind. I mean, those kinds of things for shorter term to intermediate term money, where I still want to try to get growth if there's growth to be had, but I don't want to be shooting myself in the foot if it goes the wrong direction. So there are things you can do to prepare yourself, but I certainly think we are very late in a cycle. I don't know if that's 2 months away or 2 years away, but I
Yeah,
would be concerned if everything
we're
had
in the,
just,
we're in the mother of all bubbles.
oh, for sure.
Yeah, like
Historical
this is
perspective.
coming down. Like people don't, kid yourself. Like these companies aren't worth what people are buying their shares are. I
No,
mean,
oh, no.
it's a complete joke what's going on right now. But at the same time, it's like uh, if you're going to invest, you got to know you got to play the game when the game's being played. Like right now, the projection is this is just a small pullback that's going to happen for basically a few weeks here. And then there's supposed to be a revamp and then another pull down. But eventually there's going to be something that breaks.
Mm.
You know,
And it will unwind way faster than it went up for sure.
yeah.
Because
Yeah.
there'll be a race to the exits, right? And then you'll see. So, like, if I would recommend everybody should look at this. So, you're bored, Google the Nikkei. I can't even say it properly. It's like the Nikkei 225. I think I'm saying that properly, but it's basically Japan's version of the S&P 500, except for it's 225 companies. But Google, like, look at like the chart, right, and go back to like 1989, 1990. The ultimate decline was like 85% from the highs. And it took till 2023 or 2024 to break even from 1989, 1990. Okay.
Damn.
But it went from the second largest economy in the world to the fifth largest economy. But here's the thing that really matters, and this is what kills everybody. During that massive drawdown, I'll find a chart. During that massive drawdown, there were 5 separate rallies of 75% or more on its way down to the bottom, right? So it's massive drop, significant recovery, another massive drop. Oh, this is it. This is it. Significant recovery. Oh, I got massive. And you're just
Sounds like crypto.
right. And so but it happens over months and years.
Yeah.
And so it's extremely difficult, if almost impossible, to know what's real versus what's not real, right? So that's where structure really matters, right? Because you want to have strategies that have a mechanism to not give all of that back if you end up going through a season of volatility like that. And I think and I expect that. I expect that we'll see it. I do think, to Taylor's point, you can't blow bubbles forever. At some point in time, it's going to burst. And when it does, we have to remember we become such a financialized economy, right? So I remember, this is an old stat, but like in 1975, like 7% of our GDP was financial based, and now it's like 48% or something. So we're such a financialized economy. So many people's jobs depend upon money moving, and so much people's wealth depends upon money moving and assets appreciating. That there's going to be all of this money that's constantly looking for the next big thing. So I think whenever this does bust, it's not going to be like this massive fall, then we just start a slow grind back up of rational investing. It's going to be a yo-yo for months and years. Um,
Well, Taylor, I got a question for you. So, with you guys were discussing the jobs numbers. I know that we have a potential. I think at 1 o'clock today, there that Powell is having an emergency meeting. But do you think that that's going to play into the potential for either getting a rate cut or not getting a rate cut? For interest rates.
I have no idea. I didn't know they were doing an emergency meeting today.
I saw a notification on it. I mean, I could be wrong. Let me double check.
Well, I haven't been paying attention to it, but like, really, when you're in this type of, you got to quiet the noise. All right. And the reality is, if you're going to be an investor and you're going to do this, you got to understand that if you're going to try to day trade or buy these dips and everything, you really just need to follow one principle: is you buy when things are bullish, not when they're bearish. All right. And right now, pretty much everything out there is on, when it comes to crypto, is bearish. Okay. You wait until the trend changes. All right. And then you ride the wave and you make your profits, and then you pull your money out and you sit and wait, because usually within a year, you get like two opportunities. The rest of the year, you're just sitting there, kind of going, okay.
Doing DeFi.
Yeah. But like, DeFi is different in the sense of, well, if you do need to pull your money out when it's a bullish run, like convert to cash as you're going along, and then
Well, I mean, unless you're doing lending, because lending you get full price appreciation, staking you get full price appreciation. So the only time you need to pull is when you're selling. And then of course, full range pools, you don't get as much price appreciation, but you get the majority of it. And and if you're thinking more long term, and then like on Bitcoin or things like that, it might not be a bad way to just make monthly income. But yeah, it really just depends on your financial goals. But go ahead. I'm sorry.
Yeah, just you gotta know your system. You gotta think, but you gotta also understand it's like, the markets just don't make sense now because they're not based on any really fundamentals. And so everybody wants to talk about fundamentals. Everybody wants to be like, oh, well, this is it. It's the reality is right now, I think because we had massive inflation, a lot more than actually what was reported, that money ended up in the markets. Then unfortunately, if the Fed keeps cutting, they're just going to go back to an inflationary environment, which is going to just pump this bubble even higher. But the reality is the government is right now, at least the traditional markets, they're backing the market, because I think in their view, they know if this thing comes down like it needs to for future generations, the baby boomers are done. And they're all in the market and they all are living off their investments. But when that reality hits, and it will hit someday, because something's going to happen and there's going to be a huge break, and even the government's not going to be able to stop it. And
there's not going to be enough of a social safety net.
Yeah, I mean, there's so much leverage out there right now that a few of these investment firms go down, well, here,
It'll be like a cascade effect.
Oh yeah, it's going to be a disaster when that happens. I mean, how much is in that? Is it the derivative market, Jeff?
What? How much is in the derivative market?
Yeah, like it's like
Rotationally, it's like 200. It's insane numbers. But you got
yeah,
to remember, the derivatives go both directions. So like you
yeah,
might have an option to buy at 1 million and an option to sell at 1 million, and so those offset each other, right? But it's the total amount of debt in the world is like 350 trillion. The total amount of options and derivatives is a number even beyond that. Like it's insane numbers that are floating out there. I mean, we've completely decoupled from reality a long time ago. I actually found a quote. I have a quote. This is that I got to go soon, but I want to read this to you because this is I want to. For example, Oracle. Okay, Oracle went up in September 40% in a day. Now it's given all that back, and it's drawdown in the last 6 weeks, 8 weeks, but it went up 40% in a day because it kind of blew out, expectations and earnings and everything, right? So this is we all remember the 2000. Well, maybe some of your people don't, but I know the three of us remember the tech wreck, right? And the Nasdaq went down 83% from March of 2000 through the end of 2000. Okay, so check this out. Sun Microsystems. You've probably heard of this company, right? This is a quote. At 10 times revenue, so if you have a price to revenue ratio of 10x, so at 10 times revenue, to give you a 10-year payback, I have to pay you 100% of revenues for 10 straight years in dividends. That assumes I can make that much money. That assumes I can make that much in profit. That assumes that I have no expenses, no salaries to pay, no R&D to pay, nothing, right? And so he's saying, like, that's at 10x. Well, like right now, Oracle's trading at a 50 PE. It takes 50 years at current earnings to get back in earnings if they were all paid out as dividends what you paid in price. Tesla, I don't even know. It's in the hundreds. It's like 300 or 400. It's insane.
Good.
So we are not playing
In reality.
anymore. We're just playing the greater fool. The problem is if you wait for reality to come back, you might miss a decade of growth.
But Jeff, you didn't hear the news over the week about Tesla with Optimus? They made a better hand so it can actually jack you off now. So easily going to be able to
far more dexterity in the hands. Far more dexterity.
That P ratio is coming down. All right, I can already tell you.
So the P ratio is.
I'll tell you, as soon as they make a female version of it, that Optimus stock is going to go crazy.
Have you seen the Chinese one that they brought out that everybody was like, "This, there's a person in there. That is not a robot."
I have not.
Just once, I'd like to leave this podcast not desperate for the future of humanity.
They made it a female, and they had it like squatting the whole time. I was just like, what's up with these squats? Like it was like very suggestive almost. You're just like, take my money.
Look, I'm not interested unless it's realistic. So I'm going to need it to correct me on a regular basis. You know what I mean? Tell me I didn't do something proper. Just I made a mistake.
Jeff's in the degradation. Jeff wants to get trampled. Tell him he's a bad boy.
Let's see. One more thing. Let's see what NVIDIA. So yeah, NVIDIA has only got a price to earnings ratio of 53. So compared to Tesla, it's a screaming buy, right? So I don't know, guys. If anybody can figure this out, they'll be billionaires. That's really.
Honestly, I don't think that there's a way to figure it out, and really, it's why I've been so bullish on crypto, because I mean it's especially things like Bitcoin that as long as quantum computers don't crack it or whatever, it's really the only form of currency that keeps governments and institutions and everybody honest, because there's only so much of it. You can't mine any more of it. There's only so many that can exist. Gold. I mean, shit. Once we get into space, God only knows how much gold they're going to find and precious metals out there. Obviously fiat, they can print as much of it as they want. Tether, a stable coin, they're constantly minting more of it. So, I mean, there has to be some kind of currency that there is a finite supply of it. It's otherwise you're going to see what we've been talking about, where You get these overinflated markets, these massive bubbles of hundreds of trillions of dollars, and just numbers cease to even have any meaning. But well, let's go ahead and go around the horn. Taylor, closing thoughts. I know that both of you are busy and got to get going.
Yeah. So just at the end of the day, everything's bearish right now, and so be very careful. If you're thinking, oh, this is gonna just bounce off some line, they can blow through those lines. Those are fake. Those lines don't really exist.
Right. Bitcoin doesn't know there's a line there.
Yeah. So just know those. Just know that.
I'm going to echo that. One of my favorite quotes from a client of mine was, or from an advisor friend of mine was, "The market doesn't know it owes you money." And he says that to every client that comes in that won't reposition something because it's below what they bought it at or below what they wanted to sell at. I mean, I have a lovely lady right now. She's a great client. She's in her 80s, but she's a big holder of Microsoft, and she's told me she doesn't want to sell it till it gets to 600. And I'm like, it was at 250 18 months ago. But she has this arbitrary number in her head that when it hits that, that's when she's going to let go, right? Well, she told me that when it was 40 points, when it was $40 higher than it is now. So, I don't know. We're all just monkeys.
Well, I'll end on this. Me personally, I understood when I invested in crypto that it was a long-term investment. It's, can you make fast money? Yes. That's not how my mind operates, and that's why I love DeFi so much. I've bought solid projects that I see building real-world applications that are being adopted and built on by large institutions and governments. I'm going to keep holding. I don't care what the market does. I'm, zero or Valhalla. And what I'm doing with those bags is I'm using DeFi and I am earning with those. And are all of them going to make me money? No. But if one or two of them does, it's going to make up for the ones that don't. And that's what my focus is. And part of that is being educated on what's going on. Most of you out there don't have the time to pour over the internet all day long looking at charts and data and news and all those things. We do that for you with the DeFi WIZE newsletter. If you want to, it's only $20 a month, and every morning, Monday through Friday, I get up at 4 a.m. Taylor gets up at 4 a.m, and we put it together. We go through all of the places where we find our information. We boil it down into a 5 or 10 minute read that you can read with your morning coffee or your morning tea. And there's a DeFi summary, there's a TradFi summary. We give you levels if you're into trading, different buy and sell ranges, and we give you on some of the top pools in our community. We give you some ranges for DeFi, and most of our ranges, I mean, you can see, they hold very, very well, and this is all on the 4-hour time frame. So the time in range earning is always going to beat APR. Well, not always, but you're going to do much better, long term if you can just stay in range for a longer period of time. And then, of course, news, that supports. Oh, here it is. This is what I was looking for earlier. Old crypto is dead. It has long taken time to finally arrive at a place where almost everyone who has spent some time in crypto is unwilling to hold tokens with no underlying fundamentals or credible growth story. This is exactly what I see happening. Key L1s are going to be the solid investments. After that, you're going to get DeFi and RWAs. There'll be a little bit in gaming and things like that. It will be a trickle down. Meme coins, of course, being at the very bottom. So we're moving from that speculative market that I've been talking about for years into a utility market. And if you can stay invested in strong fundamental projects, you have a much better chance of profiting. So thank you, gentlemen. I appreciate you taking the time. And until next time, Fetching Crypto out.
All right. See you.
See you guys.